We've heard warnings that tech mega caps are fully priced and there are fears of an AI bubble. But our guest says tech isn't overvalued, it's just misunderstood. We're joined by Eric Jackson, founder and president of EMJ Capital. Eric, always great to see you. Thanks very much indeed. What do you think is the big misconception about tech right now?
Hey, Andy, I think the biggest thing is the elongated S curve that's taking place with AI investment right now. People are just impatient and constantly wanting to see the immediate payback of these billions that they see going out the door, especially from the hyperscalers into chips. And the truth is that it's just nothing's wrong. It's just taking longer from the time you buy the chips and you put them in the data centers for the enterprise customers to actually build the applications, to map onto their data sources in their own enterprises, and to show the payoff. So, take a name like Palantir. I mean, they typically get raked over the coals for being overly expensive on a forward price to sales basis. I think people are ignoring the fact of the contract growth that they have under contract and how quickly those enterprise accounts are growing. And that all comes before they recognize the revenue down the road. So the billions in revenues are coming. These hyperscalers do not spend billions willy-nilly. And I think that's what the bubbleistas are missing.
When you refer to an S curve, what's that, Eric?
Well, it's, every technology typically goes through this period of kind of slow early adopters, buying into new technology, whether it's mobile phones and mobile ads that go on those phones, or something like AI. And then suddenly the whole crowd catches up and things start to take off. So, we sort of see the same dynamics in adoption of ChatGPT or adoption of some, NVIDIA GPU chips. And so the question is, like, from a revenue perspective, like, how quickly are we going to see the ramp up in revenue? It's coming. We're just still at the very early stages where the ski slope is just, tacking up. But don't, make no mistake, the black diamond steep curve is coming.
And you do say the big prominent AI names may be fully valued, but the supporting players, such as the electricity generators, there's plenty of opportunities there.
Well, no, I would even point to an NVIDIA. I mean, they've been in the spotlight, with Michael Burry taking shots at them recently. If you look at their historical kind of forward price earnings multiple, it's actually below the mean of where it's traded over these last 5 years. And so even a name like that, I think, is sort of undervalued and still underappreciated. I think the market is just can't wrap its head around the sheer magnitude of these quarterly numbers that they're posting, that they just can't imagine that there's another gear for them to shift into and start accelerating even more, because it's unprecedented for a company. So a name like that, though, I think is still cheap, on a relative basis to where it's traded in the past. And a Palantir, even though this, people can't believe these price to sales numbers, again, it's like a slow moving curve. And suddenly these enterprise customers that they continue to bank are going to continue to grow. Energy storage names, though, names like Iron and Cipher, which I own, that are critical parts of, building out all the AI data centers that we need. Again, those have been cut in half in 2.5 weeks in November. So you are getting a significant discount in some of these names. And now, some of them have rallied back furiously this week. So, if you miss it, and if you sort of sit back and say, oh, I'm not going to catch a falling knife, sometimes you can miss. Cipher, for example, has had a 3-day 42% positive rally just this week. So the violence, swings back up, can really take some people's heads off.
Tell us one or two concerns clients are expressing to you right now.
I think it's been the volatility in rates and the stubbornness in the rates coming down, and sort of the Fed's fixation on higher inflation. When's that going to come down? And just in the month of November, just the magnitude of some of the drops in some of the small cap stocks. So we mentioned Iron and Cipher just in the last segment. And so I think just a lot of people they buy into some sort of long-term, multi-year thesis, like saying that, oh, these names are the sort of picks and shovels of the build out of AI, and I believe they could 10x, 20x, 100x in some cases. But then when that short-term volatility comes and you see some of these names that you hold in your portfolios, that, Iron and Cipher both basically dropped, I think, 47% from November 4th till 2.5 weeks later. And so that's difficult for a lot of, retail investors to stomach. And I try to, say that, like, unfortunately in tech investing, that's the feature, not a bug. Even a name like Apple had something like 6 drawdowns from 1981 until they introduced the iPhone in 2007 of 50% or more. And then even after the introduction of the iPhone, they've had 4 more drawdowns of between like 20 and 35, 40%. So that's the granddaddy of tech. And so in these smaller cap names, the moves down can be even more vicious. And unfortunately, you just either have to ride it out. Because if you try to time the market and jump out and think you're going to jump back in, more often than not, you're going to lose more money that way than if you just stick to your guns.
You just give us a bit more on a couple of those names you mentioned. IREN, IREN. What are they all about, Eric? Just remind us.
So they're building from the ground up. They're buying the real estate out there in geographic locations, including, by the way, Prince George, BC, but also like West Texas, where they think they have like a cost advantage, like a local power operator. They can negotiate, a fixed cost for the foreseeable future to build out an AI data center. And so they're taking on that risk. They obviously believe that AI is not in a bubble and it's here to stay. And so then once a data center is built out, sometimes they're buying the chips from NVIDIA to power it up, and they're flipping on the power. And then they're saying to the hyperscalers of the world or the oracles of the world, hey, who wants to access our data centers? We've got the power, we've got the chips, we've got the actual physical data centers. And they're basically, it's a game of musical chairs now, where these hyperscalers, they need access to that energized data center source now, not in 3 years from now. And so the people who have kind of thought ahead and built these things out are sort of sitting in the catbird seat. So an IREN and a Cipher have basically morphed from being just a Bitcoin miner a few years ago to taking their know-how of how to build these data centers and kind of positioning themselves at the front of the queue to kind of take orders and power kind of the next generation of AI. So they're referred to as neo clouds. So IREN and Cipher have 3 gigawatts each of these kinds of data centers coming online in the next year. So that's what makes them more interesting, in my opinion, than some of the other players trying to kind of maneuver into this space.
And just broadening it out here, a stock you've long been involved with, Open Door, that you have liked the look of. Do you still favor OPEN?
Yeah, it's 10x since the summer, and I think it's still a potential 100-bagger from here. What's most interesting for the Canadian audience is that the guy who was the COO of Shopify, who basically had to do nothing, just sort of stick around, and whenever Toby steps up to executive chairman, this guy Kaz Nejatian was in line to become the next CEO of a $200 billion market cap company today. He decided to quit and take the job as CEO of what was then a $3 billion market cap company. Now, why would he do that? I think it says something about the challenges that Shopify faces in the AI age. And by the way, this is their most important week of the year right now. But it also says something about how well positioned Kaz thinks Opendoor is to kind of disrupting that whole real estate market using AI. You won't need a real estate agent anymore. You won't need to do showings of your house anymore when Opendoor really rules the world, Andrew. So it's very interesting from a bunch of angles. Obviously, home ownership, cost of homes is a crisis around the world, in Canada, in the U.S. And so Kaz is looking to kind of make Opendoor the Amazon of real estate: faster, cheaper, more price certainty of selling your house when you'll get the money in hours instead of weeks.
Eric, I think we'll have to jump. Thank you very much. It's always great getting your insight.
Great to talk to you.
Eric Jackson, founder and president at EMJ Capital.